What's going on, Investomaniacs? Knight Rider here, and today we're talking about Dropbox. But first, can we talk about my awesome shirt? I mean, Arnold is numero uno. That's right, rocking the Arnie. I think my camera's on mirror, sorry. So you may have not been able to read that, but we're rocking the Arnie Schwarzenegger. So I sold on my Dropbox simply because I think there's a lot better options out there that I am now personally aware of, and here are a couple of them. They're cheaper and they have better growth. And I believe in the fundamentals more than I believe in Dropbox at this point in time. So first, let's look at a price to revenue. They're losing money, so the PE is a little bit more complicated. So let's just do a price to revenue for simplicity's purposes. Price to revenue is at 27.7%. Well, first of all, it's pretty dang expensive. All right, you can see HubSpot, Etsy, Dexcom, and ServiceNow are all much, much lower in spite of growing quicker. Okay, so last quarter, growth came in year over year at 26% compared to mid 30s plus for the other four options. So for Dropbox, you're getting less growth and you're paying a lot more for it. And you can see their operating margins are just god awful at minus 33. Again, that in and of itself isn't a horrible thing. Like small companies, newer companies are growing very, very quickly. They're going to have operating margins like that. It's okay. But when you can get better operating margins, you can even get profitable companies like you have over here with HubSpot, Etsy, Dexcom, and much better growth and lower price to revenue. I mean, it just makes sense, right? Like, why are you going to be in Dropbox unless you think that's strictly from a financial standpoint, right? If you're just looking at the numbers in a box. Dropbox, no pun intended. I don't know. But when you take into consider fundamentals, of course, you might think the future of even though, look, the numbers right now on Etsy look good, but if you think the future is going to be bad, whereas Dropbox, the numbers are really expensive right now, but you think the future is going to be super, super good, then of course you can buy Dropbox even though the financials. In this case, the financials are worse, and I personally am not a big fan of the fundamentals. Also, I just want to point out on our operating income is they lost $519 million on $1.3 billion in revenue. So yeah, I don't like that. They are, with their number of active users, not paid users, but just active users. You can see here in 2016, they were at 500 million. At 2017, they grew 4% to 520, and then from 2017 to 2018, they grew 3.8% to 540 million. So there's really not much growth going on here. Typically, I want to get out of stocks when the user growth, obviously for something that has users and is online and whatnot, when the users stop and all they're doing then is monetizing the existing users, that's a point when you need to ask yourself, do I still want to be in this stock? There are some times where it's going to be yes. So for example, a couple years back with Facebook, more recently with Match, which I just recently got out of. Those are things where I was willing to be in the stock even though the user growth wasn't that high because the revenue growth was doing better. And plus, I thought those companies had they had pricing power and they were very, very dominant in the market. I wasn't concerned about their ability to price where they wanted or losing market share. In contrast, with Dropbox, they have a crazy amount of competition. I think their margins are going to be absolutely crushed. They don't have pricing power because it's a commodity they sell. Unlike Tinder and Facebook, where there's a network effect to it and it becomes more valuable, right? This is just storage and the ability to share that storage with other people. That's all it is. And it's a commodity. So obviously there are some security things when you're working with enterprise, and I'm not saying there's nothing else, but just on a simple level, that's the truth about it. We're selling storage and the ability to share that storage with other people in a simplistic manner and in a secure way. And, so it's just too much of a commodity. So let's take a look at some of their competitors. So first, we have Dropbox, which their free version. Now, granted, they do, of course, have their enterprise version as well as their business version, but some of their competitors don't have that available right now. So just for an apples to apples comparison, I'm just showing the individual level. So they offer 2 gigabytes of space for free, and then for the upgraded version, it's $10 a month or $100 a year. Let's just say $100 a year, because that's most of the other ones are on an annual basis we're going to be comparing to, for 1 terabyte. All right, so you get 2 2 gigs for free, and you get 1 terabyte for $100. Okay, how about Google? With Google Drive, Google One, you get 15 gigs for free. That's a lot more than 2, and for $99 a year, down here, $99 a year, you get 2 terabytes. So you're getting twice as much stuff. And plus, there's a whole bunch more you can do with Google Drive that you cannot do on Dropbox. Okay, how about Amazon? If you have a Prime membership, well, that's about half the dang United States of America. If you have a Prime membership, you get unlimited photo storage and 5 gigabytes of video and other storage for free. Plus, you get all that other good old Prime stuff, right? Ooh, I love me some Prime. If you want a terabyte, it's $60 a year, that's 40% cheaper than what Dropbox is charging. Okay, how about Apple? You got the iCloud. You got 5 gigabytes for free, and then obviously you need the Apple product, but you get 5 gigabytes for free, and then if you're in the United States, you get 2 terabytes for $10 a month. That breaks down to $120 a year, and that is, in terms of what you're getting per dollar, that's a lot cheaper than Dropbox. Okay, how about Microsoft? All right, Microsoft has their OneDrive, which you get 5 gigabytes for free, and then if you want a terabyte, it's only $70. But here's the thing, with OneDrive, you get Office 365 for free. That's a deal right there. Okay, and there's a couple other smaller competitors like WeTransfer. That's something I use in my personal day business that I own. I have a publishing business, and a lot of people send me audio on WeTransfer, as well as Dropbox. I'm not saying I don't use Dropbox, I do. But there's other options, and you got like Box, which they offer 10 gigabytes for free. This is another publicly traded company that I do not own, by the way, but if you want to look into it, you can. So the point is, there are a lot of competitors. There are cheaper stocks out there with better growth rates that I believe in the fundamentals more. I think Dropbox is going to have a really hard time making any sort of margin, because the truth is, Amazon, Google, Apple, Microsoft, these guys, they don't need to make money on this. Right? They don't need to make money. They're just lumping this in with their other stuff. Amazon is just lumping this in with their Prime membership. Microsoft is lumping it in with their Office 365. Apple obviously wants to have it as an incentive for people to have iPhones and be on Apple products. Google, they're doing it because they want people to be on their Google products. And by the way, you don't actually have to have a Google product to use their free. They also have Google Photos where you get unlimited. I didn't even talk about that one, where you get unlimited free photos and I believe video as well. And that's different from the Google Drive, but there's just so much free stuff out there. There's so many options, and they're literally fighting the 4 largest companies in the United States, right? They're fighting Apple, Amazon, Microsoft, and Google, and these are all guys who can subsidize this particular product because they can put it in as a group, something else, just to get more customers on their platform and help lump it in with other things. So whereas Dropbox can't do that, right? This is their standalone product, and it's a commodity. So I've changed my tune on it. I don't like it anymore. I sold it, and I hope you guys have a great day.